China has become the world's largest auto exporter, and it is just starting to ship electric vehicles, causing some concern to the likes of Elon Musk and Tesla and a number of other car makers. Phil LeBeau covers all things cars around the world. He's in Chile to explain why that country and others are reluctant to restrict imports from China. Phil.
David, they love the pricing. That's the main reason why you don't see restrictions, whether it's an electric vehicle or more commonly the internal combustion engine vehicles. Remember, 71% of what China exports. And here are the three largest auto exporters in the world. You see China surpassing Japan. There's Germany at number 3. It's the price of the vehicles coming out of China because of the size and the scale and the cost efficiencies, or what you would say the cost advantages that they have. I want to show you some of those cost advantages. We are at an auto mall, truly an auto mall, where every brand, even like GM and Ford are here, Toyota, Hyundai, and a ton of the Chinese automakers. This SUV is from DFSK, which is a subsidiary of Dongfeng. Take a guess at how much it costs, guys. $9,200 equivalent U.S. dollars. $9,200 equivalent U.S. dollars. Here's another example that you'll say, well, it's easy to see why somebody in Chile would buy a Chinese vehicle versus a traditional automaker that we see in the United States. Compare the price of a Haval Julian, which is a base model crossover utility vehicle, with the Toyota Corolla Cross. It's a $6,000 difference in the base price there. And when we talk with buyers here at this auto mall, almost all of them say the same thing. The quality is good and the price is right.
Because of the performance, and it's very cheap in comparison to other brands. So that's why I prefer this Chinese brand.
So you would buy Chinese again?
Yes. I definitely prefer a Chinese car. I've traveled 500 kilometers, a lot of traveling, and it's very safe.
As you take a look at shares of BYD versus Tesla, and I know BYD is really the one Chinese automaker we talk about the most. Remember, Tesla still outsold BYD in terms of pure electric vehicles last year. Tesla selling 1.8 million, BYD selling 1.6, though this year it is expected that BYD is likely to pass Tesla in terms of sales. By the way, they've just begun selling both Teslas and BYDs down here in Chile. And while this is not the largest market, guys, what we're seeing in Chile, we're seeing in Australia, we're seeing in Israel, we're seeing in countries around the world. They're not the largest auto markets, but they are markets where the Chinese, because they continue to build and they need to use their capacity instead of shutting down assembly lines, they are exporting. And what you're seeing is more and more people saying, I like what I see, I'm going to buy it. Guys, back to you.
Yeah, Phil, it's fascinating. So glad you're there to sort of bring it on the ground to our viewers here. I mean, what is the possibility of the Chinese getting closer and closer to our market? Mexico obviously comes to mind, and or even building facilities in Mexico. So there might be an opportunity to import into the U.S.
That's the key, David. Within the next 5 or 6 years, you will see several automakers likely begin final assembly in Mexico. Why is that important? Right now, if you build a vehicle in China and export it to the United States, there's a 25% tariff. If you were to build in Mexico because of NAFTA, you could bring it in under the NAFTA guidelines. Even if you set a 2.5% tariff, it basically eliminates that tariff. And because of the cost advantages that China has in terms of its scale, the concern is they can come in with entry-level vehicles like this SUV. And I know people will say Americans won't buy Chinese. You know what? You ask somebody, do you want to pay $9,000 for an SUV, or do you want to pay $19,000 or $20,000 for an SUV? No contest. And that's what we found with everybody we've talked to down here. Brand loyalty goes out the window when you have that kind of a price advantage.
Phil, this report is unbelievable by you, and I want to point out that if I had to buy a Volvo here, many Americans would not know that's Chinese. So let's put yourself in the shoes of the president. You want to get the CPI down, but you're the union president. This would smash the union. We would buy Volvos because we wouldn't know the difference. This is a horrendous situation for someone who's trying to help the unions, isn't it?
It's going to be tough for them to figure out what they can do aside from trade restrictions. We heard Senator Josh Hawley out of Missouri say yesterday there need to be trade restrictions put in place if Chinese vehicles are built in Mexico. We're going to hear more and more about this in the years to come, because you're not going to be able to bring down the prices much more than what we already see. And yes, there are efficiencies and a few other things that the big three are working on, as well as foreign automakers building in the U.S. But, David, the bottom line is this. our costs cannot come down as much as the Chinese are enjoying right now as far as a cost advantage.
Yeah, which has been the case in so many different industries, and certainly it's going to be a struggle. Phil, thank you. Obviously, we're going to hear from Phil throughout the day.